we know that things are not at their worst just yet, but it's quite shocking to see how the rand reacted to this fallout.
Yes, I mean, if you look at what happened during the hours of 1 o'clock and 3 o'clock in the morning here, the rand had fell to 1560 levels. But one must take into account that that fall, that accounts for the 10%, was done in extremely low liquidity levels. Very few people in the market, very few traders, very few trades actually going through, and very small amounts moved it to those levels. Once the banks started coming in and more liquidity came on board, you had seen the rand coming back down to the 1460 levels and trading around those levels fairly stable for the rest of the day. But that does not take the crisis away. That is sparked by Turkey. And I've listened to the economist from Istanbul. The problem is that the world wants to be seen more constructive things that is done by the central bank. There's also a bit of concern about the independence of the central bank. In the last 2 months, we have had President Erdogan making statements about interest rates, that he does not want interest rates to rise too much, etc. That brings the independence of the central bank into play. The inflation rate is on the rise. It is almost 16%, with interest rates around 17%. And it's felt that the central bank needs to do a little bit more to stop rising inflation. On the other hand, you should also be cautious that you don't push the country into a recession. But at this stage, if you look at what's happening, I think it's justifiable for the central bank to actually increase interest rates again, to not only curb the fall of the lira, but also to curb the further increase of inflation.
So what are the short-term ripple effects of this Turkish lira fallout on South Africa?
On South Africa, similarly for Turkey, a stronger dollar and higher interest rates is bringing the foreign cost of their debt to higher levels, and that's the same for us. The further our currency weakens, the more expensive our foreign debt becomes, because ultimately that needs to be paid in rand, so that becomes more expensive. And apart from that, just your increase in interest rates in the US, which we expect to interest rate increases furthermore, also increases your cost of credit. So that puts a damper on our economy. With the weak rand, we're importing inflation. We can definitely look forward to a further increase in fuel prices.
Look forward to it.
Well, I'm not going to say look forward to with it, but with a smile, but I think you know what I mean. It's definitely on the cards. And that brings us into a situation where most probably with a weak currency, higher inflation, we're much closer to interest rate increase than what was generally expected, which is not good for the fiscus, because your retail spending, your consumer spending, everything becomes difficult and under more pressure than it currently is.
So what can we do to protect our markets? Can we do anything at all?
Well, here's an interesting one. I said to one of my colleagues this morning that when you're in the boxing ring and you sort of defend all the time, then the opponent will just hit harder and harder. So maybe it's just at this stage sort of better to take the punches and don't overreact. And at the same time, if I say don't overreact from a central bank point of view. Don't overreact with unnecessary changes to policies. And even for your importers and exporters, don't overreact and make irrational decisions that could be very costly, because as fast as it weakens, just as fast can it start strengthening. And I do believe that we will find some level ground and some smoothing out of this crisis, and then return to better levels on the rand.
And what's the South African Reserve Bank thinking right now? They're watching quite closely.
I think they're watching it very closely. I think what they will bring into account during a next monetary policy is second-round effects of the weaker currency, like on inflation, etc., and make their decisions. But I think the Central Bank of South Africa has been very prudent in what they've done over the last couple of years. We were ahead of the curve, and I think we're still ahead of the curve. So I don't think it's at all necessary for them to act immediately, but I think they are monitoring it very closely.